My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. People, my friends, I'm just trying to make you a little money. My job, not just to entertain, but to educate, teach, talk about how a market can turn around. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Heads you lose, tails you lose. Oh, that's how tons of very smart money managers see this market. If the Fed tightens too much, we're going to have a horrific recession, and profits will evaporate. If the Fed doesn't tighten enough, inflation will keep rampaging and eroding the value of your portfolio. They scoff at the idea that there might be some sort of middle ground Goldilocks solution, a fairy tale, if you will. They're dubious about days like today, where the Dow gained 92 points. The mighty Dow gained 92 points. The S&P advanced 0.1%. NASDAQ inched up 0.01%. Sometimes I think they want it to go down. Maybe they want you to lose money. Maybe they've made their money. Don't care if you do. See, hardly a day goes by without someone reminding me of this sour dichotomy. And I laugh, and I tell them that I see things quite differently. Yeah, I laugh because I see so many segments of the market that could be potential winners in 2023. It's hard to take these supposedly sophisticated doomsayers seriously. You know what I've been thinking? Been thinking about this. Maybe it's because there's only 5 more months to Memorial Day. They're thinking they're like gardeners. They're like gardeners who decide not to plant because the weather conditions look frightening now, particularly in Chicago. Not realizing that the current weather is temporary and it's a long darn season. Mostly these bears love to focus on the big picture and the major averages. They have what's known as a top-down view of things. They're only looking at the macro data and the Fed without doing a stitch of actual digging on individual companies. They're trying to scare you away from planting anything. They don't have those knee pads I have, you know, where you're like going like this. They don't have anything like that. They ain't got no trowels. Maybe it's because I've been gardening for 35 straight years. Nice, hopeful hobby full of potential pitfalls. But I see varietals that are worth betting on every single day. The naysayers don't know a potato from a tomato. Me? Jim's None Better tomato sauce wouldn't exist if I listened to these guys.
That was easy.
The bears only want to pull weeds, but I'm more focused on planting down some sector seeds because there are a lot of them that could work next year. I'm going to break them down for you because I'm in a gardening mood. First is healthcare. Now, this is the first time in recent memory where we're not seeing any pushing from Washington on drug pricing. And we're far from enough, we're pretty far from the next presidential election that these companies won't be used as the typical political piñatas. At least not in 2023, they won't. Now, the top-down perma-bears, that may be too nice a name for them, perma-weeds, I don't know. Think I'm trying to find a needle in a haystack. But you know what? Picking quality healthcare stocks isn't like looking for a needle in a haystack. It's like shooting fish in a barrel. Maybe with a machine gun. Eli Lilly's got this. Listen, I'm not going to give you one example. All right? Listen to me. I'm giving you one example. Listen. Mounjaro. Not Kilimanjaro. Mounjaro. Get this. This is an obesity drug. At just 15 milligrams, this will give you a 22.5% reduction in weight over a 72-week period, according to one phase 3 study. A reliable weight loss pill. That's like a license to print money. In a couple of weeks, when everyone's making their New Year's resolutions, how many millions of people will swear that they're going to lose 10 pounds? They're going to go crazy for this drug. So it hasn't been approved yet. So I want to let some top-down strategist who's only looking at the bond market, the 2s and the 10s, scare me from owning Eli Lilly? Their biggest issue, can they make enough to meet demand once it's approved? I call that a high-quality problem, which is why it is a big position for the Travel Trust, of course, which you can follow pretty much I write about this thing every single day for the Investing Club and talk about it, do everything with Jeff Marks, other than say, I want the drug now. Next up, Humana. Humana just had an amazing quarter. Yes, an amazing one. This managed care company had a second-rate Medicare Advantage program last year. If you're on Medicare, you need one of these supplemental plans because lots of doctors don't take Medicare. Hi, I'm Jim Cramer. Do you take Medicare? No. That's how usually it goes when I see a doctor these days. Last year, I had a professional with some real dough screen this stuff for me. And United Health was hands down the winner for a program that made it so I could go see a lot of doctors. But when she came back to me this year, she said, you know what? Humana had changed their tune. They have the best medical advantage business. Holy cow. Who would ever thought that? And who cares, by the way, if the Fed engineers a hard landing for the economy? Humana's not even on the darn airplane. Health insurance is recession-proof. Trust now owns this one, too. An unheard of buy for me. Humana? Then there's Johnson & Johnson. Oh, that's hard to find. J&J. Wow, how did I come up with that one? Who's ever heard of J&J? All right, this stock's been pulled down. It's been in a rut. Pulled down by all those non-pharmaceutical products that don't have much pricing power. Things like Neutrogena or baby powder or Band-Aids. Great name brands. Lousy growers. So they're kind of like, you know what, they're like radishes. I mean, they're really hard to grow, actually. So J&J is spinning off the consumer division as a separate company that can consolidate a mature industry, while the remainder becomes a high-growth drug and medical device company. Are we supposed to avoid that because the Fed might get it wrong? The bears are confident they'll either overshoot or undershoot, but either of those outcomes is fine if you own the stock of the brothers Johnson. Say you don't like healthcare. Have you considered the trillions of dollars the federal government's throwing at bridges, tunnels, and buildings, regardless if the Fed throws us a severe slowdown? Yeah, it's already banked. Do you know how much steel they're going to need? Nucor's the best steel maker in the country. They're going to be in that mix, and the earnings estimates are way too low. Don't you think Deere and Caterpillar will have to go 24/7 just to meet the demand from the engineering construction firms that build this stuff? Their order books are insane. Their gross margins voluminous. Their international competition gone. It's the way it used to be when America dominated manufacturing. Oh, and let's not forget, you've got one more reason to buy Deere. There's a global food shortage. That's why I recommended Corteva last night. They make genetically modified seeds and pesticides. Agriculture is insanely strong right now, but the bears want you to ignore that whole industry and instead focus on the two-year Treasury, which is apparently sending all the wrong signals. Oh, I guess I got to be scared. I ever see the 2s and 10s in my garden? Maybe I got the wrong varietals. If you bring up all the government spending that's going to hit next year, these strategists will tell you why that's terrible for the economy. Because it's inflationary, and we've already got enough of an inflation problem. That's probably true, but it's totally beside the point here. Even if it's inflationary, it's still good for Nucor, Caterpillar, and Deere. The real inflation is in white-collar America, and that's going to come down in 2023 because we simply won't need as many computer sciences, bankers, lawyers, advertising people, and by the way, yes, even contractors, because housing is going to be hurt by higher rates if the Fed overshoots. We just learned today that rents are at last falling pretty precipitously, something to watch. You know what's always worth planting? What's really hardy? The bargain retail stocks. The bears will tell you the retail earnings must be coming down. Sure, I don't care. That's fabulous for places like TJX, who are really ready to pounce on the soon-to-be carcass that is Bed Bath & Beyond. These all price changed by excess inventory from struggling chains. The worse retail does as a whole, the more opportunities they get. Same goes for Burlington. How about Ollie's Bargain Outlet? I never bump into mine. Hey, what does Mike Wilson's super bearish crystal ball over at Morgan Stanley say about that? Honestly, I don't care. I wonder if he belongs to Ollie's army like I do. I don't think he's in my battalion. Hey, by the way, you won't see Nike in the bargain house either. Excellent quarter just this evening. Speaking of Morgan Stanley, that's one of my favorite financials for 2023. It's got an insanely cheap stock, a high dividend, and its profits are roaring. Will Morgan Stanley earnings be eroded by inflation? Frankly, the more the Fed tamps down on inflation, the more I want to stick with a company that makes its best numbers when we get 4% unemployment, up a bit from here, down, and 4% inflation, quite a bit from here. That's likely where we're headed. How about Goldman Sachs? Whether the Fed overshoots or undershoots in 2023, it's hard to imagine a worse year for IPOs or mergers than this one. Yet Goldman still crushed it. What do the bears say about that, especially now that the firm's cleared out a lot of dead wood, or at least wood that wasn't burning hot enough? Then there's aerospace. We have a tremendous travel boom right now. It's causing an impossible shortage of planes, with only one company fully certified to sell all sorts of commercial aircraft, Airbus. What happens when Boeing gets clearance to sell their full product line? Even if the Fed takes rates to 7% and we have a serious slowdown, that might not be enough to bring down Boeing. Not when there's an airplane shortage. I wonder if FedEx, which just had a great quarter, needs more planes. Good number. So I see plenty of opportunities for next year. That said, I'm not hopping on the tech bandwagon. I've said over and over again that whether the Fed undershoots or overshoots, tech's likely to be hurt the worst. The bears are absolutely right to scare you away from tech. That garden's coming up empty. It's fallow. It's a gigantic, oversized part of the market still, though. And that's where the pain is going to come from, as it continues to come from. But the bottom line, there's a whole market beyond tech, and companies like Eli Lilly or Human or J&J or Cat or Deere or TJX or Morgan Stanley, they're going to grow real well next year. They're going to get in my boxes. So don't let the pessimists convince you that the entire class is barren. They are thumbsuckers. I got green ones. Mark in Indiana. Mark!
Hey, Jimbo. Mark in Indiana, home of #1 Boilermakers. Hey, my question's about Kroger. I bought it as a defensive play just before the last earnings release. And since that time, it's actually underperformed the market by about 4%. And I'm wondering if you think it may be associated with the Albertsons merger.
It is. I mean, you know what? They say it's the 700,000 whatever union jobs. I believe them. I happen to like Kroger. I happen to like Albertsons. But we got a Justice Department that's quite different from what people think. And an FTC is really different. They are anti-deal. So it doesn't matter. You can put two angels together and they'd be able to say it's the devil. All right, there's a whole market beyond tech. Don't let the pessimists convince you that the entire asset class is barren. On Mad Money tonight, 2022 was certainly not the year of the IPO. But of this year's class, who are the winners and who are the losers? I'm taking a snapshot of the cohort. Then we're taking a closer look at the winners in the financial space for the year and revealing a couple of ideas that I think are going to work in 2023. And it's the best performing sector of the S&P 500 so far this year. But can the energy sector ever perform in 2023 if oil doesn't do anything? I'm finding out from RBN Energy's Rusty Brazil. So stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.